So let's take a look at a different product here over on gold. And I want you to take a look at some things. I'll just show you a few that are personal favorites of mine. I love when gaps are filled. And one of the things that I love about gap fills is that when price gets to an area, once it reaches that area, not before, but once it reaches that area, then we can go from a high time frame, which we're on a daily chart right now, and then shift down into the lower time frame, and that's where we will take our trades. So let's say, for example, you see that there are two main gap fills that happened this past couple of weeks. You'll notice with me, there's the gap, price fills the gap. There's the gap, price fills the gap. Yes, this is hindsight. But one of the things that is important about hindsight is you do it enough, it becomes foresight. So let's take this as our high time frame and say that these are areas of interest. Right? So when price gets there, I am interested to see how price reacts on a lower time frame, on my chosen lower time frame. So let's say we'll go down to the 5 minute. So here are our locations for price to go and fill those 1 day gaps. Now I'm looking at the first one. So price comes down and it fills this gap. Now for me, this candle is not necessarily one I would just enter on. So could I get into the trade later on? Okay, well, there's a few different things. If you've taken the opportunity to look at some ways of trading, you'll notice that gaps can also reject price. So as I've talked about before, if you notice, I'll put this halfway middle line on there. Remember, we talked about the closes of the candles dictate oftentimes the strength of the move, right? You notice how these candles close above that middle level? Love that a lot. Price comes down, dips in there. Now, if you are familiar with break-in structure, which you would see something like this, changing your market structure almost, price goes up. We have an idea that maybe price might continue, but we want to get a good entry. So where do we get our good entry at? Well, if you notice underneath here, we have either an inversion, which means essentially two gaps right over the top of each other, or we simply have this gap right here. Once again, check out how beautifully all of these have closed above the middle level of this gap, right? There are many ways you can enter trades. There are many ways to enter trades, but you'll have to find something that you find comfortable for yourself, that you can not only look for the right place to enter, but also more importantly, where am I going to put my stop loss? Where am I going to put my take profit? Either way, I love both of these. Now, why do we like these so much? Because what happened down here? We filled in our gap on a daily time frame. That's the most important part. The daily was filled, right? Once that happens, then we can look at whatever continuation type entry you like. You can find that within the following price after it hits our place of interest. Now, with that being said, let's go to the other one, because we saw that price was going to go up here and snag this one. All right, is there anywhere where we could have taken an entry? Well, me personally, I'm always going to look at these gaps, as I've mentioned before in a few episodes. And once again, what do we see? There's a gap. After we break to the fill, right, the fill of this daily higher time frame imbalance, we come down, we leave a gap, we fill the gap. Me personally, I would have loved to have taken a trade right here, somewhere around the halfway point of this wick, or even possibly at the fill of the gap. Those are just ways that I enjoy taking trades. But you'll find what works best for you. The most important part is we only use 2 time frames, right? We use a high time frame to guide us in the right direction and a low time frame to tell us where exactly to trade so that we can have great risk to reward.